Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host for the day, and that's Nathan Peterson. But let's bring in our next guest for our hashtag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome to the show, Landon.
Hey, guys. Good to be here.
All right. Good to have you here. So we're talking Coinbase. I always look at Coinbase, and then I usually overlay a comparison chart with Bitcoin. That's basically what I do. We've seen a lot of commentary on this name. Jim Chanos from Kinnikos Advisors, he's shorting the stock, and then you've got other people that are bullish on Bitcoin that love the stock here. It's a pretty bifurcated as far as your assumptions on this. It's down 24% this year, Landon. What kind of data are you guys seeing in LikeFolio?
Yeah, so this is an interesting one. This is one that we were pretty bullish on a couple of years ago, and things are turning a little bit. And I think there's, the LikeFolio data is supporting a bearish case on Coinbase, and there's some other things that I think that are a little bit more general that would support that as well, and I'll get into those. But when we look at just overall growth, they are lagging behind Square, they're lagging behind PayPal. When we look at happiness, again, they're lagging behind both of those. And even though they've had unbelievable growth over the last couple of years, I think that you really got to look at some of these factors. I mean, look at this happiness decrease. They're at 2017 levels when it comes to happiness, down to 58%. That's pretty low for an exchange or for a custodian, whatever you want to call them. And so I'm concerned with that. And again, their revenue numbers and their growth has been unbelievable. 144% year-over-year growth in 2020, 545% in 2021. They went from losing money in 2019 to $3.6 billion in profit in last year. So they're crushing it. They're absolutely crushing it. But when you look at just kind of how they're operating and the space that they're in, there's a difference between a company that, like TD Ameritrade, that holds your stocks for you and that goes by the book and is regulated, and that's what you want. Crypto is a totally different animal. And when you think about the kind of people who are, leading edge when it comes to investing in cryptocurrencies, having a really large company sort of oversee and make judgment calls and do things like that, it kind of goes against what crypto is. While this chart's up real quick, crypto's exploding. I mean, look at all these numbers. Paying with crypto, trading, investing, selling, all those numbers are tremendous growth year over year. So crypto is not going away. They're on the right side. They've got a rising tide. But I think that they may be a victim of their own success a little bit. So when you think about, again, the type of person or the type of entity that's investing in cryptocurrency, it's a little bit more in favor of deregulation and outside the box kind of finances, decentralized finance, that kind of thing. But when you get as big as Coinbase has become, then they start making decisions like they recently blocked 25,000 accounts that were Russian or possibly suspected of doing wrong things. And I think it rubs the cryptocurrency community the wrong way, because the idea here is that cryptocurrency is off the grid. We're not part of the system, right? But then you have a custodian that's just saying, you know what, those accounts are out. And that's not how cryptocurrency is supposed to work. It's kind of goes to the old saying, if you don't have the keys, it's not your coins. And if you have cryptocurrency on Coinbase, you don't have that currency right now until you withdraw it. So I think it makes people a little bit uneasy. I will say that our score, they're not reporting right now, but if you look at what our score would be if they're reporting, they're at a negative 91, which is a really big number.
Whoa.
It can only go down to 100. So everything's turning downward. The happiness is a big indicator, big drop in happiness. I think some of it has to do with the decisions that they made around those individual accounts and making people uneasy. But then also the fact that the purchase intent, while it's doing well, and again, they've grown tremendously, they're far behind their competition, and their growth is slowing while cryptocurrency is booming. So I think it might be in the wrong industry to be a huge player in cryptocurrency, because I think people in cryptocurrency want the small guy or they want the decentralized guy. Love to hear your thoughts, though.
Hey, Landon, this is Nate. So curious on that happiness factor. So how much of that is, I don't know what goes into that component, but three things come to mind. And I think first about the fees. And I've heard from, other people that are in the crypto space that they are relatively high. Customer service, I have a crypto wallet at Coinbase. Customer service is non-existent. It's gotten a little bit better. recently? And then thirdly, how much that happiness is tied to the actual price of Bitcoin? Meaning if Bitcoin's at all-time highs, then all of a sudden they're happy and they love their provider. So what kind of components go into that happiness measure?
Sure. I don't think the price of Bitcoin has a lot to do with it. We take out bullish, bearish, that kind of thing. We're looking at people talking about the service itself. But I do think the fees are a big factor. I mean, if you look at what it costs to trade equities on a platform like TD Ameritrade, it's basically zero, or it is zero. You look at, want to go on Coinbase and buy a Bitcoin, you're going to pay $60, $70, $80. It's ridiculous how high the fees are. I mean, it reminds me of 1999 in the stock market when people were charging that much. So this is very early in crypto, but I think the fees are way too high. And I agree, there is no customer service. So they've gotten a little too big, and I don't think that they can support the number of clients that they have, and B, I think that they're now becoming one of the type of institutions that crypto is supposed to go against. These really big bureaucratic companies that are going to make decisions not based on that are going to make decisions where they're banning accounts, they're blocking accounts just because of something that's happening geopolitically. They shouldn't do that. I mean, they should just be neutral. They should say, hey, if you want to trade crypto, this is where you trade it. And that's it. They shouldn't get into the mix of all this stuff. And I think they're hurting themselves PR-wise with that. And then, of course, the fees. I agree, Nate. That's going to come down as competition comes up. But I think that it's, people are somewhat nervous thinking, well, this is a really big company and I'm holding a bunch of coin in it. Maybe I should pull it out to my hard wallet, my cold wallet. That's what I've done personally. And I think a lot of people are doing that.
Now, with that, some of that data, you mentioned only 58% positive on that, but then you hear all the mentions, your other chart on this, Landon. I mean, is the pathway for Coinbase, once they get their fees in order, the competition's already heating up from Block, from PayPal, from anybody, right? And there's more coins that are probably going to be publicly traded down the road. I mean, they're like the first in on this particular cycle, and it seems like the mentions are just exploding across the board. There's got to be some semblance that, hey, Coinbase might be the last one standing, because I remember, other stocks in different sectors or areas, it's the same thing. Once they get their footing, everything starts to work out.
Sure, and they have a huge, huge first mover advantage. I mean,
Right.
They are by far the leader, and they're the most trusted. I mean, if you go up to somebody and who's just got into cryptocurrency and you say, where did you buy? The answer is almost always Coinbase. That's the first one. But I think as you get a little bit more advanced, I mean, think about the demographic that's trading cryptocurrencies. They're out there on all kinds of platforms. They're doing all kinds of swaps and whatnot. I think Coinbase is the on-ramp. And then as users get more advanced, they start to drift out into other things. And Coinbase is defending that by adding a lot more coins. They're adding NFTs. They're taking the right moves. But I do think that they may be in a position where they're a little bit too big, which is weird. There's almost no other industry where being big is a bad thing, but I think cryptocurrency might be one of those. They've got to really hammer in the trust. They've got to show that they're neutral and they're not going to step in and do different things with accounts. They're just going to let accounts be accounts, which I think they should do. They are, like I said, they're jumping into a lot of these other coins that people want, some of the altcoins. They're getting into NFTs. So they're making the right moves, and they have the strong user base to support it with that first mover advantage. So I like where they've gotten themselves to. I worry, though, based on some of the decisions they've made and some of the just the general way that people think about cryptocurrency as being small, decentralized, and neutral, if they're putting themselves in a position that goes contrarian to that, and that may drive people off into other areas. So great, love the on-ramp, love the fact that they're the leader. It's a rising tide. They got a lot of things going for them, but their growth is slowing and their happiness is very concerning. Happiness
is concerning, and maybe that has something to do with Kathy Wood out there buying 385,000 shares this week. People seem to like to fade her on a daily basis at this point. All right, great stuff as always, Landon. Appreciate it.
All right, have a nice day. Thank you.
All right, that's Landon Swan, co-founder of LikeFolio.com.